So Bitcoin actually pumped up 12.45% in the last 24 hours or so. And we've seen an interesting amount of liquidations occurring for BTC, specifically on the shorts, as we had a bit of a squeeze on them. Now, I want to be talking a little bit today about the Bitcoin technical analysis and where I think the price action is heading next. We'll be taking a look at this on the daily, weekly timeframes at the bigger macro picture, so everyone gets an idea as to kind of where I think things are heading and the kind of patterns and structures that we should be concerned with, and of course what we want to be really excited about. So as I get into today's video, smash that like button. I really do appreciate that. If you are new to the channel, why don't you go ahead and subscribe as well. So let's jump into what's going on here with BTC, right? So as you can kind of see here, guys, we did get rejection right here on our 50 exponential moving average, the blue line that is coming through the charts. At the moment, at the point of recording today's video, this is coming in at $63,856. Okay, so this is the area that we have seen the rejection from at the moment. Our support levels at the moment are still down towards our 200 exponential moving average at 52,238. I do think that is going to hold from our traditional ways of looking at the market. Now, it's no coincidence that we did get rejected from our 50 exponential moving average, the EMA, because we do have a trend line coming down here that happens to coincide very nicely with that particular area. We again find ourselves in the lower high situation with lower lows to boot with it, as you can kind of see right here from our chart. So we do have that idea, and a lot of people will be really bearish on Bitcoin and on the crypto market based on lower highs and lower lows. However, there are a few things that I've been talking about on the daily time frame, weekly time frames, that actually give you a little bit more confidence rather than just thinking this bull market is over. And for the record, if the bull market is over, it's going to be one of the worst bull markets in crypto history, which I do not think we are in. And I do think we're actually going to be seeing additional gains and some pretty decent moves across the crypto market. I'm going to explain that a little bit later in the video. So here, with the overlapping nature of our candlesticks, we have to look at this through slightly different lens. Now, there's a couple of different scenarios that are potentially going to unfold with the rejection on our 50 exponential moving average. So the first thing I want to do is understand, are we in a part of a bigger kind of macro three-wave movement, which I do think that we potentially are, or we are in a kind of five-wave movement, W, X, Y, X, Z pattern. Okay, both of these kind of take you down to the same kind of position. What I want to kind of make sure that we are not doing is trending in any way with the start of a trend. And here you can see that this area does come down a little bit deeper than typical one-to-one. And this one over here would have to be the largest movement in my opinion. It could potentially be shorter, which it currently is. So there's a couple of different scenarios. And what I'm really referencing here is Elliott wave theory. And I'll show you the different things I'm really referring to. We obviously know about five-wave trend-based patterns. That's not what's really going on, but we could have the ability to see an overlapping pattern like this, where you actually see the price action contracting. Coming in like this a little bit, with your wave one being the longest wave. That's not what's going on, simply because I've measured the distance between the first area and this middle area, and basically the third area, or this middle one right here, is actually bigger than the first. So it would have to be an expanding rather than a contracting, meaning that you'd have to have a big wave 3, bigger than wave 1, of course, and then wave 5 being the biggest, right? And the wave 5 would basically make this look like it is expanding outwards rather than anything else. Okay, now as you can kind of see from this idea, now I still do not believe that that is what is going on, simply because of how we've moved here. Instead, I think the most probable scenario is a three-wave pattern taking us down towards our 200-day exponential moving average. And in here you can see, if we measure the distance now on this little area that we've just seen a bit of a run to the upside and rejection on our 50 exponential moving average, it gets us right down here into this low range, basically between 51,466 and $53,600. Okay, so again, you see all of these areas that we've been talking about for the last few weeks kind of all coming in to the idea that we are in a three-wave correction pattern to the downside, and 200-day exponential moving average is the support line that's going to see Bitcoin basically run much higher. Now, if we want to prevent further downside, we want to kind of look at our current lows being it, and we don't have any more bearish movements, then we are going to be looking for closed positions above the 50-day EMA and the 50-day SMA. There's the yellow line and the blue line on here, and we're going to be looking for breaking out of that trend line that I was talking about earlier. Specifically here, as you can see, if we can get a closed position above the trend line, that's going to be a breakout situation, which we might be able to, if we get it, go long on the market, tight stop loss, and target out into potentially new all-time highs. Great risk reward ratios on a bit of leverage like 5 to 10x, something like that. And of course, if I am to be trading, I'm going to be trading this kind of thing on BitGet or Blowfin. All the links for those are in the description below if you haven't yet signed up for accounts. There's some fantastic rewards available depending on where you are in the world, different terms and conditions and stuff like that. So do check them out if you haven't done so already. I am really liking Blowfin at the moment, so why not check that one out if you haven't done so already. But you guys know I am a big fan of BitGet as well, and I do a lot of my leverage trades on BitGet. So a breakout trade here is an idea where we basically get that closed candle, maybe a retest, entry, go long, and we can see from there. Rejection, of course, what we're at the moment is basically the short position here with the stop loss just above, let's say, the 50 SMA, and you target out those that 200 exponential moving average. Huge risk reward ratio at 3.84, and could be a fantastic way to basically short the market and make sure that you're in a reasonable position. Again, using a short with this reasonable 5 to 10x leverage, nothing more than that really, and of course, proper risk management. Don't risk more than you're willing to lose and all that kind of stuff. BitGet or Blowfin would be my go-to exchanges for the short. And yeah, so that's kind of where Bitcoin is on the daily time frame. But what about the larger macros? Well, what else is going on here that can help us understand? Well, we can see that we have no major changes in our smart money concepts. All of that is actually still very much on track. There's nothing to really be terribly too concerned with down there. There's a couple of fair value gaps and equilibrium just down a little bit deeper on next to the 200-day exponential. So again, all that's kind of coming together quite nicely. From our stochastic RSIs, we are a little bit concerned with how fast the stochastic RSI has moved on the daily time frame, indicating that we probably still have more room to the downside here. Again, we'll be looking to see whether or not this momentum for Bitcoin starts to reverse back down. We're already overbought on the 8-hour and 4-hour, so I suspect we're probably going to see a little bit more room to the downside here for BTC. On the divergence indicator, the RSI being the yellow line, the relative strength index, is also still below the 50 level, the mid-level, indicating that we are still technically bearish. No divergences with price action versus the relative strength index, so all of that is okay. I'm not terribly too concerned when it comes to those. On a weekly time frame, we can still see that things here are looking actually really interesting. And so if we take a look at this, we can see that our weekly 50 EMA, 50 SMA, and 200 weekly EMAs are actually still in really favorable positions. We can see that the 50 exponential moving average is at 45,450. The 200 weekly exponential moving average comes in at 31,400, and the simple moving average on the weekly time frame is at 40,750. Price action is above all of them, and so we remain in a bullish state of play. Okay, so all of that is actually looking rather good when it comes to BTC. I'm not terribly too concerned over a potential slippage to the downside. It may be that we have to come down a little bit deeper on the weekly time frame, but I suspect that that's not really the case. If we take a look at the stochastic RSI on our weekly time frame, we are down in this oversold area. We can be down here for a few more weeks yet, as indicated in previous kind of macro views, where we are looking at kind of being in this corrective state of play for a little bit longer, and typically happens after the Bitcoin halving events, of which we should probably actually jump into that and take a look at what's going on when it comes to the halving events, right? So if we take a look at this chart here, let's zoom right out. The halving events are indicated with the green dashed lines, and you can see that when we have the Bitcoin halving events, we usually follow this up with a bit of a bearish movement. Okay, this has happened a few times in the past, not every single time, because you do just find the market goes stagnant and goes sideways. But over here, as you can kind of see, we have had pretty decent corrections in 2016 Bitcoin halving event, and we can also see over here a stagnant market back in 2020. Right now, we've had the Bitcoin halving event, and we can find ourselves stalling out just beforehand and collapsing down just a little bit afterwards. So again, I would say that this isn't anything terribly too unusual. It doesn't last forever. Once we have these corrections, as you can kind of see back in 2020, we kind of fell back down. It was actually very quick. It was a couple of weeks, and then we started to see exponential growth back to the upside. And of course, you know, there's corrections on that journey to the upside as well. Back in 2016, it lasted a little bit longer. I think we had a total of around 6 or so weeks here, and before we really started to get into those next big moves to the upside. And so for where we are right now, it's kind of aligned to that thinking that yes, this is pretty normal, pretty natural. Yes, it can feel very painful for some, but this is a healthy correction before we start to see that next big move to the upside. You can see here that there's still, you know, lower lows and lower highs on the weekly time frame, but the wicks are telling us that there is actually still a lot of demand when it comes to BTC at these levels, and so therefore, you know, some of the supply that's coming into the market is being soaked up. So overall, I'm not terribly too concerned about the price action of BTC. It does look like it is actually holding up very, very well, considering everything else that is going on. And so in my mind, this is nothing but a huge opportunity to dollar cost average into bigger positions before we get into that next big leg to the upside, which means I've been buying into many altcoins that I think have come down very nicely, are in great accumulative areas, right? If you're a member of CC down in our Discord server, you've seen the notifications popping up left, right, and center, not only what I'm buying, but also what I think is in great areas for accumulation. And some of them have actually, in the moves to the upside, already hit some of the take profit areas on the bigger macro scale as well. And so anything coming in right now calling off is actually another opportunity to dollar cost average, to double dip into some of those ones that you've already taken profits back on, because I still see them also surging up into take profit area number 2, 3, and 4, for example. So all in all, I think Bitcoin is actually working out quite well. We see the crypto market kind of behaving as expected. There isn't anything terribly too unusual going on here, and the next kind of couple of weeks might be a little bit volatile. It might hurt a little bit, max pain in the market, but that is the pain to be buying up, because I think what happens after that is some phenomenal level gains. Guys, if you haven't done so already, why don't you check out this video right here, where I'm discussing what's going on with how to find and discover 100x altcoins.